Hey Trader Shane from GMT Futures and FX, welcome. Thanks for joining me for this video presentation. In this presentation we're going to be discussing or we're going to be taking you through how to become profitable using the power of a multi-system strategy. So if you're a system trader or a day trader or a swing trader and you haven't really explored the opportunity of multi-system trading, I'm going to be taking you through the whole process of how multi-system strategy trading works and how you can leverage off obviously your time and the ability to trade and diversify your portfolio and achieve obviously great returns from applying this process. So let's get started on our presentation. I'm going to take you through the statistics on applying multiple systems across across a market and multiple markets. And I think you're going to be a little bit surprised and shocked at how powerful it is to combine a multi-system strategy. Now, we know as traders that one system, if you've got one trading system, that's not going to work all the time. It basically is not going to be able to apply it in the market 100% of the time. That's just the reality of trading. So if that's the case, how do we improve our performance in the market? How do we actually get to a point where we're making money consistently? Because there's a few things that we know, and the key here is that markets are doing one of two things. So markets are either trending up and down, and that usually happens around about 20% of the time. So if you're a trend trader and you've got a specific market or markets that you're tracking, you've got to accept that the trending environment that markets provide is only really going to be occurring 20% of the time. Now, what happens for the remainder of the time is this range-bound cyclical type price action. So really, therein lies a clue already about the structure of a multi-system strategy. We definitely want to be able to take advantage of obviously a trending market, so one that's trending up or down. We also want to be able to take advantage of that range-bound type of movement. So the next hint that I'm going to share with you is that there is a secret to putting your multi-system strategy together. So not only are we going to talk about the power of multi-system trading, and what I'm going to be sharing with you in this series of videos are some of the key elements to make this process work, because it's not just about combining systems together and hopefully that works out for you. There is actually a process that you need to go through and things that you need to look at as far as the type of systems you're going to trade and also the markets you're selecting as well. So the first question we get is, particularly from a lot of our traders, the new traders that come through, how do we take advantage of that? How do we take advantage of a multi-system, applying a multi-system strategy or multi-system approach? And the first thing we need to do is really let's firstly take a look at the market conditions we could be presented with. So I'm going to walk you through some of the basic market conditions that we might be presented with as traders, and we're going to go to our charts now, and then we're going to come back and do a little bit more work. But let's have a look at these basic types of market conditions that we can be presented with. Okay, traders, so we've transitioned over to our chart here. I've got the NASDAQ, so the NASDAQ E-mini, and I've got that loaded up. Now, we're currently looking at a 55 tick chart, so 55 transactions per price bar. Now, the reason why we're looking at that, it doesn't really matter what type of tick chart you use, time-based chart, daily, weekly, whatever. We're just looking at general market conditions. So I'm going to explain these conditions, and this is what we're going to be looking at as far as our overall approach, because remember that we're looking to take advantage of the different market conditions. So the first thing we need to know is exactly what type of conditions we could be presented with. So what I've done is I've actually marked this chart up to show you how the different dynamics of the market might be working. And obviously when we look at the left side of the chart, you'll see that price pushes down. It's in this kind of consolidation zone, which is often referred to range-bound trading. And when you've got price hovering between obviously support and resistance, and when price gets to that lower level of support, you can see that there's buyers coming in driving the market up, and then obviously conversely when we get to resistance levels, there's sellers coming in driving the market down. Now this type of price activity can go on for any length of time, and this typically happens after a reasonably big move. So you'll see later in the charts that you'll often get a price breakout or a move, and then particularly if it's been going on for some, often get a price breakout or a move, and then particularly if it's been going on for some time, you'll get some consolidation. So you can see here we've got some nice consolidation. So the type of strategy that would work well here would be a cyclical type strategy, a cycle trading strategy, something that is able to pick areas of support resistance. And for the purpose of this video, I've loaded up our dynamic support resistance. Now, dynamic support are these very solid green dots, and as you can see, dynamic resistance are the red dots. So you can see that by using the red and green dots, we actually get opportunities to buy and sell the market with price staying within that zone. Now, obviously, eventually, price is going to break out of that area, and that's what I've labeled here. You see here the cyan candles dictate or indicate that there's a breakout. So this is a breakout of this initial area of support and resistance. So we're moving away from consolidation and we're breaking out of the market. The buyers have come in, we're pushing this market up, previous resistance. So what typically happens when you get a breakout is you particularly if it's to the top side or the bottom side, it doesn't really matter. If you get a breakout to the top side, price will move up a certain number of points, and then it'll come back to retest that previous level of resistance. So what happens then, if that level actually holds, that level of resistance holds, that then turns into support. So we have our support level, and you can see there that once that price pushes back to retest that level, then it takes off again, and that's where really the trend starts. So that's where our trending kind of move starts, because we've had that retest of previous resistance, it's now support, and we've got a base there that we're building. Now, in any type of market conditions, when you've got the trend, a trend breakout or a trending move, then what you're looking for is you're looking for an opportunity, obviously, to get in on the trend, particularly if you've missed that initial move. So what we've got here is we've got the ability to get into or get onto this trade or get into this particular setup by looking at potential pullbacks in that initial trend breakout move. So you can see that a number of times this market has pulled back, it's hit that previous level of resistance, pulled back again, and these pullback areas are really what we see as opportunities for us to take or add additional positions to our main breakout strategy. So what effectively is happening here? We could have been trading this area here, which is the cycle trader. So that would be our potential first type of strategy. So cycle, I'll put it down as cycle trader. Then we could be trading what we call the breakout system. So that would be our potential second system. And you can see already that what we've got is we've got a multi-system strategy. Now remember, in the introduction we said that the markets will trend 20% of the time, and they'll be in this rangy type environment for 80% of the time. So we've already applied our cycle trader strategy. So if we were just to have a cycle trader strategy, then we would miss all this move here, because this is trending type price action. It's not cyclical type price action. So it's important to be able to distinguish between the two and have your strategy be able to distinguish and be applied based on those market conditions. So here we have obviously strategy number 2 and potentially strategy number 3. We can also, if we're running a pullback strategy, then we could also have an additional strategy here looking for pullback trade. So what we're effectively doing, and John Sweeney refers to this as campaign trading. So what he refers to is that we need to identify the market conditions and apply a strategy appropriate to those market conditions. Because what we're trying to do is we're trying to build up a trading campaign, a way in which we can take as much money out of the market as we possibly can without having really to rely on one strategy. So in this situation, we potentially have our cycle trader taking money, our breakout strategy would be taking money, our trend, we've got the opportunity to get in on a pullback once we see that type of trade set up. Then we also have, and that's really a trend continuation type strategy. Then we have, and even in here, once we've had that initial move, that initial breakout, we start to get some consolidation, don't we? We do get a pullback, but we also get a little bit of consolidation here. So those areas of support and resistance, they come into play. Now, obviously, at some point, whether you're trading, it doesn't matter what strategy you're trading, that strategy is going to change and evolve into another dynamic of the market. So traders, even if you actually take a loss on this, you've bought here, sold it, bought at support, sold at resistance, you may have this losing trade here, but what you're doing is you're effectively running because you're running a multi-system strategy, you've almost got an inbuilt hedge in the market, because you've actually sold on this trade here, but you've purchased based on the trend. That breakout is a trend setup, and then that obviously works out. You lose a bit on this trade here because you're trying to go short, and effectively what that means is you've captured that continuation trade setup. So then obviously we get a point where we could potentially look at a reversal type strategy. So again, when you've had a move like that, and for example, that trade has pushed right up, we could even apply, say, the MACD here. So if we add in the MACD Bollinger Bands there, you can see that we're getting that divergence, just slight divergence there across our levels there. Price is making a higher high, but our MACD is actually making a lower high here. It's only marginal, but it still is. And then obviously you've got the once you've made that new high, then the next swing high is a lower high. So that's potentially a catalyst for our trade reversal. And you can see that if we were to short that strategy, then that would be very profitable, because we're capturing obviously the reversal setup. Now, this could have pulled back again. We could have had the pullback, which we would have here. That's another potential pullback. And the pullback strategy, depending on where your target is, has been potentially profitable. But we've also got that hedge of the reversal. So even if this pullback doesn't make money, we could potentially jump on the reversal here. So you can see how we're playing the dynamics of this market. We're actually trying to get as much juice out of this move as possible. And when we get to a point where we're basically trading like this, we have the potential to make a lot of money because of the dynamic setups. And then you've got price breaking through support, which would be the trigger for our potential trend. Now the trend isn't big here. It's not a full reversal. We don't go into a long we don't go into an extensive downtrend. It's only short. But then we get another drive up here. So price breaks up again, getting back into a potential trend, and obviously double tops there as well. So we've got the double top and then the reversal. But guys, you can see how this is playing out with one strategy, where if we basically just trade the trend, we only capture one, probably two moves, a second move here, and this here, because the trend is obviously our cyan and white candles. We've got a continuation trend there. If we're trading the cycle trader, then we're getting all of this stuff here. We're getting any time the market goes into consolidation, which we've got here. So any time we lose that trend, we're getting that cyclical type activity. So we're really capitalizing on every potential possibility that's available, and even looking at the reversal as well. So what I'm going to do in the next presentation is I'm going to explain to you how these all fit together and how to make this work. Because, so traders, this would be almost impossible to manually trade, because there are just so many things happening all at once. Like basically you've got multiple strategies going off. You know, at any one time you could have potentially 4 or 5, 6 different strategies in play. So you've got to be able to facilitate that and kind of manage that process without actually having to manually do that, because manually that becomes there's a higher probability for an error if you're trying to manually execute multiple systems. So we're going to take you through how we cover that process as part of this presentation. So I'm looking forward to taking you through our next training video and getting more involved and in more detail in this multi-system approach. Hey traders, thanks for joining us for part 1 of our multi-system strategy presentation. If you'd like to get some more information on becoming a GMT Futures or FX automated system trader, all you need to do is visit our website www.gmtfutures.com, and if you would like additional information and you have questions, feel free to email us at info@gmtfutures.com, or alternatively you can give us a call at 617-336-00875. Looking forward to taking you through the next part of the presentation. All the best. Cheers.